Public.com presents The Rundown, your daily market update in under 10 minutes. My name is Zaid Admani, and today is Thursday, December 4th. In today's episode, we'll tell you why small cap stocks are surging right now. We'll also tell you about the latest executive leaving Apple to join Meta and why Sam Altman wants to buy a space company. Then stick around to the end of the show to find out why a sports apparel company is launching a prediction market platform. We got a great show for you today. Let's go. Markets continued to rip higher this week, with the S&P 500 adding 0.3% on Wednesday, and the Nasdaq was up 0.2%. The real winner yesterday, though, was the Russell 2000, which jumped 1.8%. Now, the Russell 2000 index tracks small cap stocks, which are companies with a market cap between $300 million and $2 billion. And the reason that investors are jumping into small caps right now is because they seem to be confident that the Fed will cut interest rates at their meeting next week. Right now, the market is pricing in a 90% chance of a rate cut. And smaller companies are one of the biggest beneficiaries from lower interest rates because it reduces the cost of borrowing and it allows these businesses to invest more in their company or hire more people. So we might see a rally in small caps as we close out the year. Now, speaking of hiring, we did get some data yesterday pointing to another sign of a cooling labor market. The payroll processing company ADP reported that the private sector lost 32,000 jobs in November. So that's not great, but keep in mind the ADP doesn't paint the full picture when it comes to the labor market. It doesn't cover government jobs. So we're going to have to wait for the government jobs report to drop on December 16th to learn more about the condition of the labor market. On top of that, we're getting an inflation report on December 18th. So the next 2 weeks are going to be very interesting with the Fed meeting and a ton of government data coming out. As always, we're going to be staying on top of all the drama, so make sure you guys are subscribed to the podcast and tuning in every day to stay in the loop. Also, I wanted to give a shout out to everyone sharing their Spotify Wrapped stats in the comments and on social media. You know, seeing the rundown being the top 5 or even top 1 of podcasts for some of you guys is just insane. Now, I'm just thinking back, this show has evolved so much this past year. We went from an audio-only show to then video over the summer, and now our videos have better editing and graphics. We're also doing weekly interviews now, and this would not be possible without all you guys listening every single day. So thank you guys again for all the support from me, from Mike, Connor, and of course, Public.com for listening throughout the year. And we're not slowing down either. We're going to continue to improve the show going into 2026. Let's just hope the markets keep ripping. Let's run through some headlines, starting with Meta. Mark Zuckerberg just poached another executive from Apple. This time it's Alan Dye, who was Apple's head of user interface design. Dye's been at Apple since 2006, and he took over major design responsibilities when Johnny Ive left back in 2019. So this is a big loss for Apple. Alan Dye oversaw the UI of the iPhone, the Apple Watch, and also most recently the Vision Pro, which might explain why Zuck hired him, because at Meta, Alan Dye will lead the design for smart glasses and VR hardware. Now, speaking of VR, Bloomberg also reported that Meta is planning to slash the budget of the Metaverse division by as much as 30% next year, with most of the cuts hitting the Quest VR group and the Horizon Worlds group. So I think Zuck is finally coming to the realization that VR is never going to be a mainstream thing. I mean, I've been saying this for years now. Nobody wants to put a thing on their face, you know? But I do think the AI smart glasses are very promising. I have a pair of the Meta smart glasses. They're great. I use them all the time. And I think Zuck is doubling down on that. And now with Alan Dye leading the design, it could give Meta's products a more Apple-esque feel. By the way, Meta is also planning to open up retail locations in New York, LA, and Vegas to give people a hands-on demo of their VR and AR products. Now, I was looking at some pictures. These stores kind of look like Apple stores to me. So Meta continues to be the best copycat company in the world. But overall, Zuck continues to be going all in on everything right now. He's spending a ton of money on AI, and he's also pushing hard into hardware. Meanwhile, you have Apple continuing to lose talent. And we talked about earlier this week how Apple's head of AI stepped down. They also lost a ton of AI talent to Meta earlier this year. On top of that, longtime COO Jeff Williams retired, and even Tim Cook is getting to retirement age, with rumors of him retiring in the next few years. So there's a lot of turnover happening at Apple right now, but It doesn't seem to be impacting their stock price. Apple stock just hit all-time highs this week, and they're inching closer to overtaking Nvidia to be the most valuable company in the world again. I guess ultimately all that matters for Apple is, can they keep selling iPhones? And based on the success of the iPhone 17 and iPhone 17 Pro, that answer seems to be yes. Next up, let's talk about Sam Altman, because I feel like we don't talk about him enough. The Wall Street Journal is reporting that Sam Altman, the CEO of OpenAI, has looked into either investing in or acquiring a rocket company called Stoke Space to build a competitor to Elon Musk's SpaceX. According to this report, talks between Sam and Stoke Space picked up over the summer and into the fall, and one offer would have OpenAI invest across multiple rounds into Stoke Space until it eventually held a majority stake in the company. Stoke was founded by ex-Blue Origin engineers, and they're working on a fully reusable rocket called Nova, which is a direct challenger to SpaceX's Falcon and Starship programs. Now, one reason that Sam Altman might be considering this investment isn't just to beat Elon Musk or whatever. It's because he might want the option to build AI data centers in space, because according to Sam, Earth might not have enough energy to meet the demand. I don't know about you guys, but I feel like OpenAI should kind of figure out how to make a profit first on Earth before they start investing billions of dollars into a space company and start talking about space data centers. Let's talk about some stocks making moves today. Salesforce stock is ticking higher this morning after the company beat on earnings and provided a strong Q4 outlook. It looks like Salesforce's bet on AI is starting to pay off. Their Agentforce platform, which automates sales, services, and IT workflow, has become a monster product for them. Annualized revenue for Agentforce jumped 330% year over year to over $500 million. So between the upbeat guidance and the AI momentum, investors are starting to buy into Salesforce. The stock is up nearly 2% this morning. Now, on the flip side, Snowflake is getting hammered this morning. Despite technically beating earnings, the company's product revenue grew 29%, which beat expectations, but growth slowed from 32% last quarter. Snowflake has been one of the low-key winners of the AI boom. Their AI agent called Snowflake Intelligence gives companies insight into their data, and it's seen one of the fastest adoptions in Snowflake's history, which is one reason why the stock price is up more than 60% this year. But I think investors are starting to get a bit nervous when they saw that growth had slowed down, and as a result, Snowflake stock is down 8% this morning. Let's wrap the show with the fun fact. The sports merchandising company Fanatics is launching their own prediction markets this week in 24 states. And just like the other prediction market platforms like Kalshi and Polymarket, it'll allow users to trade events contracts on sports, but also things like finance, economics, and politics. Prediction markets are becoming more and more popular, but they've essentially become a loophole for sports gambling. See, sports books like DraftKings and FanDuel have to go through rigorous regulations to launch in each state, and many states like Texas, California, and Florida don't allow sports gambling. So that's a huge chunk of the US population that these sports books can't serve. But see, prediction markets offer a loophole. They're overseen by the CFTC, not individual state gaming regulators. So companies like Kalshi, Polymarket, and now Fanatics don't have to jump through the same regulatory hoops that sports books deal with. And they offer a similar product to the sports books, because you can go on these prediction market platforms and buy a contract on who's going to win a certain game. You can also buy contracts for who the next head coach is going to be or who's going to win the Super Bowl. I mean, it's pretty much sports gambling. In fact, it's estimated that 70 to 90% of the volume on Kalshi is just sports related. And that's one reason why DraftKings stock is down 5% this year and FanDuel's parent company's stock is down 15%. But it looks like Kalshi and Polymarket are about to have a lot more competition. Fanatics is entering the space, and DraftKings and FanDuel are also planning to launch prediction markets soon. And it makes me wonder if this sports gambling loophole is going to be closed anytime soon. Personally, I think that prediction markets are interesting, especially looking at economic data, like seeing what the market is pricing in for a rate cut or who the next Fed chair is going to be. But these days, it's just turned into a sports betting platform. Let me know in the comments if you guys have used prediction markets before and what your thoughts are. Well, all right, guys, that's the rundown for today. Hope you guys enjoyed today's episode. If you did, and you have like 5 extra seconds, consider giving us a 5-star rating on Apple, Spotify, YouTube, wherever you listen to your podcast. And if you are listening on Spotify, don't forget to vote in today's Spotify poll. Leave us a comment on Spotify. All that engagement really does help us out, and it helps other people find the show. Thank you guys again for listening, watching, and commenting. Shout out to Mike and Connor for all the work behind the scenes. And we'll see you guys back here tomorrow.